Good morning, this is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, bringing you the morning comment for the 31st of October. Dollar tumbles as Clinton's email come back in focus. The dollar and US equities tumbled on Friday after the FBI announced that it has found new emails related to investigation into Hillary Clinton's use of a private email server while she was Secretary of State. The announcement may have caught market participants by surprise, as it is very unusual for a government agency to do something like this with so few days left until the election day, on concerns that it may influence the outcome. In our view, this development may help the Republican nominee Trump to get further momentum in the upcoming days. Considering that Clinton was leading Trump in the poll battle by a small margin beforehand, this event may have brought us back to a level playing field, thereby making the actual election result even more uncertain. As a result, we expect heightened volatility in the USD and US equities this week, driven partly by fresh headlines regarding the two presidential candidates. The argument for an exciting week in terms of market action is amplified by the fact that we have very important events coming up, such as the FOMC policy meeting on Wednesday and the US employment report for October on Friday. As for today, during the European day, we get the Eurozone's preliminary CPI for October, and the forecast is for the headline rate to have ticked up. We see the risks surrounding the forecast as skewed to the upside, mainly due to the fact that Germany's CPI accelerated more than projected. Accelerated CPI in Eurozone would be good news for the ECB, as it would confirm that the bank's ultra-accommodative policy measures are working. Something like that could diminish even further the likelihood for the bank to adopt any fresh stimulus measures besides extending the duration of its QE program in December, and thereby support the common currency. We also get the bloc's preliminary GDP data for Q3 and Germany's retail sales for September. From the US, we get personal income and personal spending data for September. Expectations are for personal income to have accelerated, while personal spending is forecast to have risen after staying flat in the previous month. Accelerating income is supported by a similar reaction in average hourly earnings for the month, while the strong rebounds in both the headline and the core retail sales suggest that spending is possible to even exceed the forecast. This could bring the dollar under renewed buying interest. The core PCE price index for September is also due out, though no forecast is yet available. Central banks will be in the spotlight during the rest of the week. On Tuesday, during the Asian morning, the Bank of Japan and the Reserve Bank of Australia will announce their decisions. Both banks are forecast to keep their easing powder dry. From the US, we get the ISM manufacturing PMI for October, and then on Thursday, we get the nation's ISM non-manufacturing index for the month. On Wednesday, the highlight of the day will be the FOMC policy decision. The forecast is for the committee to keep the Fed funds rate unchanged. Given that there are no press conference and no updated forecast to be released at this gathering, market participants are likely to focus on the meeting statement, which we expect to signal that a rate hike is imminent should the data hold up. As for the economic indicators from the US, the ADP employment report for October is coming out. On Thursday, there is another Super Thursday for the Bank of England, as the rate decision, the meeting minutes, and the quarterly inflation report are released simultaneously. Expectations are for the bank to stand pat. We share this view, mainly due to the relative upbeat post-referendum economic data. What is more, Bank of England Governor Carney said recently that the bank is not indifferent of the exchange rate level, and that the inflationary impact of the rapid depreciation of the pound could encourage him to vote against any further interest rate cuts or other monetary stimulus. Finally, on Friday, all lights will fall on the US employment report for October. Non-farm payrolls are forecast to have risen by 170,000, more than September's 156,000. The unemployment rate is expected to have declined back to 4.9% in October after rising to 5% the previous month, while average hourly earnings are forecast to have risen at the same pace as previously in monthly terms. We get October's employment data from Canada as well. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX, wishing you solid trading.